So my name's Nick Armstrong. I'm the CEO and co-founder of Identitii. Our stock code is ID8. I'm just going to give you a brief overview of the company today, what the problem we solve, how we apply technology to that, talk a bit about our revenue model and our go-to-market strategy, and then I'll break into a bit more about our listing and our company. So the problem that Identitii set out to solve is that there's about $9 trillion in locked up working capital on balance sheets globally. And this is corporate balance sheets where money has been received into a bank account, missing the information about what it's for. I don't know if any of you have experienced this problem, but it's a limitation in the underlying payment infrastructure. So if you've done a SWIFT transfer before, it normally limits the amount of information to around 20 characters that you can send with a payment message. Similarly, in most local market payment systems, even in Australia, you can only send about 13 characters. So when you're going in there and saying, this is a gift for my grandma's birthday, it often cuts it off at about 13 characters. JP Morgan estimated that 71% of this information is being sent over some manual channel. That could be fax, email, or often phone call, or in some cases, check in markets like Hong Kong and the US. And this is just an example. On the left is money that we received into our bank account. We bank with Bendigo. I'm not picking on Bendigo. This problem exists with most banks globally. You can see that there's 13 characters here. They spelt our name wrong. This actually took us 3 phone calls to the bank to actually work out who had sent us the money and what it was for. It turned out that our customer had paid 2 invoices in one go, and there'd been foreign exchange fees taken out on the way, so it didn't reconcile on our books. And on the right is what this would look like if Bendigo was using Identitii's technology. So we can include rich information with a payment message. There's no limit to the amount of information that can be added. You could include purchase orders, contracts, invoices, photos, links into a chatbot, etc. And this problem doesn't just affect the corporate customer that's receiving the money, it also affects the bank. So when a payment's missing information, it often gets held up by the bank for investigation, and that process can take days. So the way that Identitii solves this problem is by creating a little unique identifier, which we call a token, that goes into a traditional payment message. Overlay Plus is our application. So we're a product company. This is a software application that's designed to be installed on-premise within a bank. And what Overlay Plus does is collects the rich information via an API that can connect into a mobile app or an internet banking screen or a portal, and then tokenizes that information. So issues a unique identifier that's only 9 characters long. It's just a string of letters and numbers that goes into any type of payment message. And then when that unique identifier is received by the bank through the existing payment infrastructure, the rich information can be retrieved in a secure and permissioned way. So all of the underlying data that's linked to that unique identifier can be individually permissioned. And that's really important now because there are global regulations such as GDPR in Europe. In Australia, we now have the Consumer Data Right, which is setting new regulations for how data must be managed. The other key part to Overlay Plus is that we use a private blockchain network, which you can see there. The private blockchain that we use is called Corda. For those of you who aren't that familiar with blockchain, you've got really 2 types of blockchain implementations. A public blockchain, which people would normally associate with cryptocurrency, such as Bitcoin or Ethereum. The public blockchain networks are being run by members of the public who provide their computing power to run that network. And in exchange for providing that computing power, they get rewarded with a little cryptocurrency that they can then sell. We don't do that at all, so we have nothing to do with cryptocurrency. Where we operate is in a private blockchain network where the computing power is provided by the members of that network. So in this case, banks. There are 150 banks in the Corda network. And it's really akin to a Google Sheet, a big shared Google Sheet that all the participants in that network can see what's happened to a transaction, and they can see an audit trail of any changes that have been made. So it's a very, very good technology for enabling information, secure information exchange, which is how we use it. And the third part to Overlay Plus is a regulatory reporting module, and I'll talk a little bit about that in our solution overview. So there's three main regulatory drivers behind what we do. The first one is around open banking. So open banking is happening globally. You should be aware of this. It's a major driver for bank investment into new technology. In Australia, it's called the Consumer Data Right. It was legislated earlier this year. Order to Cash is designed as an open banking platform for corporate customers to help collect money better from their buyers. So an example would be Johnson & Johnson would have 100,000 distributors globally. All of those distributors are paying money into Johnson & Johnson's bank account. It's often missing the information that it needs. Order to Cash solves that problem by generating a request to pay file that would go out to Johnson & Johnson's buyers all over the top of the existing payment infrastructure, and would enable those buyers to better interact with Johnson & Johnson. They can mark off what they want to pay. They can pick how they want it to be either debited from their account or sent across some other payment channel. Overlay Plus reporting is our regulatory reporting module. So this information that's missing from the payments is often needed to be reported to a regulator. This is a highly manual process for banks today. As we've seen in Australia recently, Commonwealth Bank got a $700 million fine from AUSTRAC. There have been $300 billion in fines globally on banks for breaching their anti-money laundering or counter-terrorism financing obligations. A large part of that is caused by banks not understanding what their underlying payments are for. So we can help solve that problem. And the third solution that we have is around ISO 20022. Sorry, that's a bit of a mouthful. There is a global migration happening for all banks in the SWIFT network. There's 11,000 banks in the SWIFT network who must be able to receive ISO 20022 formatted messages by 2020 and then must be able to send by 2025. So we have a solution that will solve that. This is a major, major catalyst for banks buying technology like ours, not to be understated. And so where we are in our journey, we came through a lab in Hong Kong that was run by Accenture in 2016, which is where we met HSBC. I've co-built this product with HSBC over the last 3 years. Identity owns all the IP, all the intellectual property. HSBC became a customer in 2017. The technology is live in multiple Asian markets with the bank. They call it the digital accounts receivable tool, which is their way. It's their product embedded within their banking channel that enables their corporate customers to improve their accounts receivable reconciliation. We recently signed a second license with HSBC around regulatory reporting. My plan is to sell up to 10 licenses to HSBC. They're a major account for us. We can sell multiple licenses to one bank. The larger the bank is, the more licenses we'll be able to sell. So just to talk a little bit about how we make money, this is a more traditional enterprise software revenue model. We have a professional services component, which is customization, training and support, which is generally charged up front to the client. And we make on average around 30% on that. That's non-recurring. Our recurring revenue streams, we have a base license fee, which is charged monthly. That's between $5,000 and $50,000 per month, depending on the size of the bank. And then we have a per API fee, which is when a unique identifier, a token, is generated. That's between 1 and 10 cents. Just to put that in perspective, the average BPay price in Australia is 65 cents. So this is highly cost competitive versus more traditional solutions like BPay. BPay has a customer reference number and a biller ID. Our token is unique per transaction, and you can do a lot more with it than just reconciliation. And our growth strategy has two components. One is that we target banks who pay our bill. So the bank will pay us both the license fee and the per API call fee. We estimate that there's around 25,000 banks globally who could use our technology. 11,000 of those are in the SWIFT network. The others are participants in local clearing networks like ACH in the US. We also target corporates from a marketing perspective. So corporates don't pay us directly, they'll pay us through the bank. But the more corporates using the platform, the more transaction volume goes through, and therefore the more upside we get on the API call fee. So that's a key part to our revenue model and why we're targeting the conversation with corporates. And where we are in respect of our go-to-market strategy, so we listed in October 2018. Predominant use of funds was to build out our sales and marketing capability and expand the HSBC account. That's well underway. So we're up to license number 2. We have more to come. Phase 2, which we started about 6 months ago, is expanding banks in the Asia Pacific region. So we're really focused on Singapore, Hong Kong, Indonesia, Australia, and India, and that's well underway. So we've been making great progress over the last 6 months. I've got some good news coming, so that's one of the reasons why I'm here and starting to talk more about the company. And then phase 3 is to scale up globally. We'll most likely enter that phase in mid next year. And just to give you an idea of how big the market is, there's 763 billion non-cash transactions globally. Really what we're trying to do here is move people away from more legacy type of payment channels like check or credit cards and shift them onto this new type of technology that can send and receive money a lot easier. And where we're at the moment, so I've already mentioned that we signed our second license with HSBC. We have more licenses to come. We recently were selected by the ACCC in the consumer data right testing group. There were 10 companies selected. That's very good news for us because it gives us a head start on some of the use cases that are coming out with the consumer data right. Again, it's a really exciting opportunity. Something that you should be aware of. It's going to have fundamental impact on the banking sector. In fact, the consumer data right extends to telco utilities as well, so it's not just limited to banking in Australia. So it's definitely going to have an impact on some of the more legacy businesses. Our revenue from customers is up 242% on last year, so that's been a really good sign of faith from HSBC. And also our pipeline has grown significantly. So we're well on track to deliver new license sales over the next 12 months. In terms of competitors, there are 3 buckets of competitors. We're seeing open banking companies that are coming out of the UK and Europe, where open banking really started. Companies like TrueLayer. A lot of these open banking companies are targeted at consumers. So they walk into a bank and provide banks with APIs or application programming interfaces that allow new apps to be connected into a bank. Most of these companies have billion euro valuations now. Not very many listed. Most of them are private. We have some competitors like HighRadius that are using artificial intelligence to try and solve this problem. So looking at payments and saying, we know that this supplier pays or this distributor pays at 5 p.m. every Friday, so we'll use an algorithm to try and work that out. They've got mixed levels of success in the market. And then there's other more blockchain-focused companies who are using blockchain to help with information sharing, which is similar to what we do. But the key differentiator for us is that we are FinTech for corporate banks, so we're not focused on consumers, we're focused very much on corporates, larger SMEs up to corporates. What you can expect to see from us over the next 6 months is new licenses sold to banks and further revenue growth from our existing customer. Strategic partnerships, we have 3 buckets of partners, technology partners, such as Trace Financial, that's helping us with this ISO 20022 solution. We have more technology partners that we'll be announcing over the next 3 months. consulting partners who help us actually install and distribute our software, and channel partners. So we're Microsoft co-sell enabled, which is their highest level of channel partner program, and we've got more of those to come. How am I going for time?
Yeah, doing well.
Doing well. Okay, great. So just summarise what I've been through. So Identitii is focused on freeing up the $9 trillion in unlocked liquidity on corporate balance sheets globally. Again, this problem is caused really simply by the information missing from the underlying payment message. There are some major regulatory drivers supporting adoption of technology like ours: open banking, or the consumer data right, increasing financial crime regulation, and a global ISO 20022 migration. We are well advanced in our go-to-market strategy, entering phase 2 6 months ago. HSBC, it's a testament to the company that we've been able to sign a second license with the bank. When you're in a bank like HSBC, it's very unlikely that they'll take out your technology, particularly once they have their customers using the platform, which they do. And all of the core R&D spend over the last 3 years has been in our product, Overlay Plus. We have an ongoing R&D program, but it's a production version now. So my aim is build once, sell many times. So we won't have to keep rebuilding our technology for each bank that we sell to. It should be 80% fit out of the box. Just on our cap structure briefly, we listed in October 2018 at 75 cents. Our share price yesterday, I believe, was 32 cents or 30 cents actually. We raised $11 million. We had enough cash at that point in time for 18 months post-listing. And our burn rate is stable. We're spending around $500,000 a month. I'll just make the point, even though that sounds like a lot, dealing with tier 1 banks, we have a higher cost, operating costs. We need support, maintenance, professional services teams. So there is a minimum spend that's required to keep this business afloat, but that will remain stable as we scale up with customers now. It's very tightly held stock, so the top 20 own 84%. Around 50% of the stock is escrowed for the next 12 months. And management management and co-founders own around 25% of the stock, so very much incentivised. And just briefly on our board and management team, Mike Aston, our chairman, is an executive advisor to Accenture. Globally, he's the open banking lead for Accenture, so a lot of subject matter expertise there. Also has built and sold businesses before in the technology space. Peter Lloyd is an experienced company director on several other technology companies, including Integrated Research. And our management team has a lot of experience across product, engineering, and also client engagement and delivery. So this presentation should be lodged later today or tomorrow morning, so you'll be able to get that on the ASX. The stock code is ID8, the company's Identitii. Thanks very much for your time. Happy to take questions if I still have time.
Yeah, no, you've got time for questions.
Okay.
There's a question down here.
Thanks for that. I was just wondering, a couple of comments that you made in terms of the banking that's your customer, and it takes $500K burn rate just to get access to them and all the time invested. What's the lead time between when you start a conversation and when you convert them into a customer? Yeah,
so the lead time depends on the size of bank. For a tier 1 bank, like an HSBC, it will be between 6 and 12 months. So a lot of these opportunities that have been in our pipeline for the last 6 months are at a point now where they're in the later stages. We typically take a client through what proof of value, we call it, phase, which is where we'll walk in, set up a demo environment, bring in the key stakeholders, do some business analysis. We generate a fully costed business case at the end of that proof of value exercise. We do charge the bank for that as well, just to make sure that they're serious. And so that typically would take 2 months, that proof of value exercise. After that, the business case will then go for budget approval, and that can take between 1 and 3 months, depending on the size of the bank. We are bringing that down, and the way that we're bringing that down is by working with partners who already have relationships with certain banks, like Accenture, for example. So Accenture would have master services agreements with most banks globally, and that cuts out that time for us. And in that type of arrangement, we would give around 30% of our license revenue to the partner. So in that case, it's a trade-off between speed to market versus giving some revenue away. Yeah.
Thanks for that.
Just so I'm clear, what proportion of your revenue comes from HSBC?
It's about 95% at the moment. That's on our customer revenue. So we last year, of the $2 million revenue that we did, 1.3 was relating to the research and development grant. 650,000 was from HSBC, and the balance was from other proof of value exercises that we do. So we are working hard to diversify that as much as possible, and also shift to the recurring revenue streams.
Within your focus group, pardon me, on corporates and larger SMEs, who are the competitors within that focus group that keep you awake at night, or are your biggest concern, and why?
I think there's a few. I mean, credit cards as a payment channel is a competitor to us, but credit card costs for corporates have been going up quite substantially, and so they're keen to switch on to lower cost ways. As I mentioned, that 1 to 10 cents is significantly cheaper than some of the alternative payment channels. But credit cards have loyalty schemes, so that's a big concern, is that we can't offer loyalty points or anything like that with this. The other competitors that are out there are some of the alternative emerging payment rails. So Ripple, as a company that also uses blockchain, are trying to replace SWIFT or replace some of the existing domestic payment networks. It's a great technology, but our view is that it's unlikely those existing payment networks will be replaced. SWIFT does 30 million transactions per day. It's highly secure, highly resilient, and the average value of those payments is $10 million. So there's a lot of investment in the SWIFT network. It's owned by the banks, so it's a member-owned cooperative. And the new payments platform in Australia that's just been built by SWIFT cost, I think, upwards of $2 billion. So the banks have a vested interest in keeping the existing networks in place, which is why an overlay service like ours is attractive to the banks.
So that would give you some kind of moat in terms of competition once you're into their systems?
Yeah, definitely, definitely. And we're working very closely with the NPP and with SWIFT to make sure that we're aware of their innovation plans, and making sure that we're not going to be overtaken by those payment networks themselves.
Okay, thank you.
Thanks.
Thank you. In terms of, in terms of potential competition, you put up some of the IT competitors there. In terms of banks actually spending the money with their own in-house IT people and coming up with a solution, is that a competitor? Yeah,
that's definitely a competitor. In fact, JP Morgan have launched a competitor called the IIN, which is the Interbank Information Network. Banks could do this. My view is that there's two types of banks. There's banks that think of themselves as technology companies, like JP Morgan. So Jamie Dimon came out and said, we're a technology company with a banking license. Then there's banks that don't like to build themselves because they realise it's more cost effective to buy from a vendor like us that will sell it to multiple banks to recoup our investment. So we're targeting those banks that don't think they can build it themselves or don't want to build it themselves. But it's definitely, there is competitive pressure from banks wanting to do this themselves. It would still take them, we've spent about 3.5 years building the software, so it would still take them that long, yeah.
Question down the front here.
Hi, I would like to know, beside Australia, then you focus on the markets is broader Asian Pacific, and I have heard Hong Kong and India. Why you chose these places, and what's your other target markets in Asia area? And is there any like regulation restrictions or risks when you get into this large corporate and bank system? They might have a sensitive financial environment.
Yeah, certainly. Thanks for the question. So we're very much taking a global view on this. This is a global problem. India is a really interesting market for us because the rate of digital adoption is quite high. And in fact, the tax system in India is all electronic. And what that means is that paper invoices, by regulation, are going away in India. So it's been a good market for us in that sense. It was actually HSBC who decided to launch this in India to start with. Some of the other Asia Pacific markets are interesting for us because there's lots of different regulation in each of those markets. So to give you an example, payments leaving South Korea all need to have a document attached to it. Payments leaving China all need to have a balance of payment document attached. That's a highly manual process for banks today and means that payments are getting held up for processing for days. So those markets, and also another point, Thailand. So Thailand is making their local payment infrastructure ISO 20022 compliant by next year. And so a lot of the more regional and local banks in Thailand are going to need to buy technology like ours. So there's some unique things to certain markets in that region. In terms of regulation, we're not regulated. Because our technology is provided to the bank and we don't handle any money, all the money is handled by the bank in the underlying rails. That way we don't have to be regulated. So all we do is we're an information sharing platform. And so the bank will still need to comply with all of their in-country regulations and any other financial crime regulations that they need to comply with.
Thank you.
Thanks.
Any other questions?
Hello, are you familiar with a company called Variance? And would they be, with their technology, could they do some of what you do?
Variancy?
Yeah, they're based in Collins Street.
Yes. I am familiar with that company. So my understanding is Variancy is more focused on the credit card rails, so enhancing credit card rails. And the problems still exist in those rails. We're more focused on the payment infrastructure, the underlying payment infrastructure, like the direct entry system or the new payments platform here. But the problem still exists. So yes, there's another company called Look Who's Charging as well, Australian company. They were just bought by Experian, the data company. And Look Who's Charging, when you have your credit card statement, often there'll be a name like XYZ Pty Ltd, and you'll have no idea what merchant that was. So Look Who's Charging will enrich that credit card statement with the actual trading name of the merchant and the geolocation so that you can automatically do a reconciliation. So it's just an example of where that problem exists, but in a different segment. So we're very much focused on corporate payments rather than the more consumer type payments.
We have time for a final question if anyone has one. No?
Okay. Thanks very much, everyone. Appreciate it. Thanks.